Well, good day. My name is Ted Ryan, and I'm the founder and boss of me at Thomas T. Ryan and Company. We publish a daily stock advisory newsletter to help you pick winning short and long trades, both daily and weekly, in the market. And today we're going to show you a little bit about how we go about doing that. This coming Monday, tomorrow, the 17th of November, 2014, we're going to have two new picks, which are the first one here is HOT, symbol HOT, Starwood Hotels. And what we're looking at here is my TC 2000 research screen, which I look at every day. Starwood Hotels, you can see here, this is the monthly chart, weekly chart, daily chart, hourly chart, and 10-minute chart for Starwood Hotels. We're going to focus today on the daily and the weekly charts mostly. What we see when we look at Starwood Hotels is a potential short sale. The reason that it's potentially short is you can see, first of all, it's had a big run up over here. But when we look at the weekly charts, which are most important when we're looking at a daily swing trade, what we see is a broken trend. So this stock went straight up here and it has now broken. You could make the argument that it is still in a long-term monthly uptrend, which it probably is, but it had a pullback from this acceleration right in here. And that's what we see right here. This acceleration broke. And it broke probably, I think this was probably on earnings, around the end of September. It had a huge pullback. It has now retraced that pullback back up into these moving averages, the 12-week, 50-week, 26-week moving averages. And as a result of doing that, we see a MACD that has been running down for quite some time. In fact, this became divergent on a weekly chart in the MACD right here. And we see this showing up on the monthly chart as a break in the MACD histogram and the momentum of the stock. So the momentum of the stock failed, and it really, the great trigger was right here where we see a divergence. This was back in February of this year. And the stock did break down a little bit, but then continued to run up again and again and again, all the while this MACD has been divergent. So this has really been out of alignment since, certainly back here. And you could argue that we are back to that point now, but we're going to argue that, in fact, this has a longer way to go down. It's been forming a triangle in here, and we think it's going to break out of that triangle. But at the very least, what we're mostly looking for on these is that there is some evidence of a more powerful, longer weekly trend that we can get on board with at the right moment. And the right moment is probably going to be tomorrow, Monday, because what we see is the stock has stalled out again on the daily averages at the 50-day moving average, where once again, the stock is now overbought. So this is a classic situation that we look for, overbought stock against a declining trend line. And the technicals help us do that a bit. So we have a strong weekly pattern of going down. MACDs are negative. The trend has started, and here it is overbought again in this trend. We're going to bet that on a new low from this past Friday, 78.18. We're going to take this with a sell stop at 78.15, and we'll have a sell stop. A sell stop for slippage 78.08. And then we're going to have a stop out, protective stop out at the high 78.79. So this is going to be our trigger. We're betting that if the stock breaks through the prior day's low, it's going to continue on down in this trend line. So that's HOT for Monday, November the 17th. Let's take another look at another one which will be coming out tomorrow morning. This is a long. This is EV, symbol EV, Eaton Vance Corporation, a large mutual fund company. Back on the 7th of November, they had some very strong news. They got SEC approval for some new actively managed ETFs, which had previously been shot down. I think BlackRock and some other folks had attempted to get SEC approval for this. I don't know why Eaton Vance got it, but whatever they did was correct, and they got it. And so as a result, the stock catapulted up on November the 7th. We're now going to try and pick it after it's had a little bit of a retrace from this high. So we see it up here, shot way up, pulled back, and then continue to pull back. So it has now pulled back to the 12-day moving average. It's still quite above its weekly averages, but the thing that we like about it is there is a long-term uptrend in the stock. This, of course, is a little bit out of alignment right in here. I don't like that, but it's oversold enough, and it's sitting against some of these longer trend lines here monthly that we'll see what we can do. Hop on board this stock here. It does have positive technicals. This is a positive MACD technical here. It's not particularly overbought. The trend has been negative, but that's okay in this case because the stock has had some new news. It's going to now move in a new direction. This is the indication that the stock is now going to move in a new direction. Question is, are we going to get in at the right point in time? And hopefully that's what we're doing here today. When we see stocks that are oversold like this, the stochastic is the 5-day slow stochastic is down here, and this stock is sitting on a moving average like that. We had a little bit of a green bar, which means yes. Over here we can see the movement on the 10-minute, on very clearly on the 10-minute. So Friday was a good day for this stock. We're going to bet that when we take this over Friday's high, 41.49 will be our buy stop entry, and our stop out will be the low of the day plus or minus 3 cents. So we'll call it 40.75. This will be our plan, and so that'll give us a risk of whatever that math is between the high and the low. You'll see it in the letter tomorrow, but that'll be our risk amount, and we're hoping we're going to get 2 to 3 times that risk amount as we move forward with EV on Monday. If you'd like to learn more about what we do, please feel free to give us a shout or sign up for a free trial, 30-day free trial, no obligation whatsoever. Don't need your credit card, don't need anything like that. Just go onto the website, ttryanco.com, and sign up and see if you like what we're doing.